Welcome to Building Toronto's Skyline, a podcast exploring the current state of Toronto's construction and development industry from a unique construction perspective through engaging and entertaining podcast interviews with the many stakeholders in the industry. This podcast is brought to you by Fusion Corp, a construction management company. Here's the founder and CEO of Fusion Corp Developments, Inc., and author of Building Toronto's Skyline and Battle of the Skyscrapers, the host of this podcast, Nick Ainis.
All right. What an intro, eh?
Nick, how did I do, buddy? Every week I look forward to your review. Did I nail it this week?
You did pretty good this time, I must say. You didn't screw up like usual. Such a kid.
Nick, I have a little update on a previous guest of Building Toronto Skyline.
Oh, let's hear it.
Have you heard that your previous guest, Brad Bradford, has made the announcement he's running for mayor in 2026?
Yes. I'm pretty excited about that. I think he's a good choice for Toronto. Definitely a good choice. And, I missed my beer with him on Tuesday because I was up in Belleville on a project.
I didn't know that was scheduled.
Now that he's announcing that he's mayor, I might not get my opportunity back again.
Well, this is disappointing, but I have a suspicion he's running for mayor because he's riding the wave, like he's riding the high of being your guest on Building Toronto Skyline.
I think that's it. And you know what? I think he supposed to be at TMLX?
Yeah, he texted me to say he can't make it, but he'll be at the next one on November 29th.
Probably because he's mayor.
Well, to be determined, but I'm worried now. We have a new guest joining the fray, and I think maybe he'll take a run at becoming mayor in 2030.
Is that Brian? Come on, Brian, are you in?
I don't know that. I have worked for government, but I don't know if I'd be interested in being mayor.
Well, you know what? It's being a politician probably is a thankless job, and I think you have to do it because you love it. And but it's for people who are in the private industry and doing business every day and enjoying what they're doing, and I guess making money. Why would you want to do that? I mean, unless you're at a stage in your life where you're looking for some change and wanting to give back or trying to help the city at large. So
yeah, it's definitely a calling. I would say it's definitely something that has got to be on your heart, I would think. So
for sure. I think you could do. I think you'd be very good at it. By the way. So,
you never know. Maybe I'll change my mind. Anyway, we'll see.
Fair enough. Maybe by the end of this podcast. So, Brian, I really want to thank you for coming. You built this incredible enterprise, and I want to hear all about it. I also have another podcast called Building Success. You could equally be on that show as well.
Thank you.
You built an amazing, successful career. And we know each other. Do you know that we know each other?
Yes. I know we've met before. Yes. That's right. I'm trying to remember how, but we talked.
I'll remind you. So through Ed Starr.
Oh, right.
Yes.
Ed Starr, way back when. Yeah.
Yeah, we were doing the Aurora project.
Yeah.
And we were looking for financing at that time. We ended up just, cutting a deal with our partner, and we the condo market took a hit, so we just said, you know what, we'll try our luck somewhere else. So, but it is still a nice project, and we're obviously doing some amazing things right now. But we're here to talk about you today, and so that's how we know each other. So now you remember, right?
I do remember now. Yeah.
Ed was pushing you in there to do some financing for us, and. We're still at the approval stage, and it took forever to get approvals because of the heritage issues. And, whenever you have heritage issues on a project, it can drastically delay the project. Plus, we had to deal with our neighbor, which was the Historical Society. It was our site was near a historical landmark.
I remember now. Yeah, I remember all these issues. Yes.
And that literally delayed us for a couple of years, to be honest with you. So, but we finally got site plan approval, and then we all, like Ed and I, sort of ventured out of the project. So, but in the end, it was we had a great time doing it, and made some money, and that's what it's all about.
Yeah,
So,
yeah, yeah.
so Brian, why don't you G- tell us a little bit about your career, because
Oh,
I looked at your LinkedIn profile, and you've got some really amazing base here. You started your career at CMHC, and then you founded your company, and now you're doing some amazing things, and I want to hear all about it. So
okay. Well,
let's hear it.
um, I'm going to use your. See, I see you're wearing a Johnny Cash T-shirt. So I'm kind of in the real estate from a finance point of view. I've been everywhere, man. So
All right.
I'm gonna use that.
Good analogy.
So, uh, I started my career at CMHC in default management. So I started in a market not unlike this,
Yeah.
um, fixing affordable housing projects actually. So it was I know a lot about affordable housing, probably more than I've probably forgotten more than most people
Ah,
know. So it
well,
was a
that's why you
very
know it. That's not why you know Ed Star then very well.
yeah, exactly,
Yeah.
exactly. So I did a lot of that. I'm an accountant by profession. So when I left CMAC, I was a regional controller. So I managed the Ontario region from an accounting point of view. I decided I want to go back into the real estate world. So I actually left there, went into mortgage brokerage, commercial mortgage brokerage, worked for Canada ICI, which then got promptly purchased by the Case and MCAP. So I ended up working for those guys.
Yeah.
The peak of that one is I got to work on Maple Leaf Square, like a big giant
Oh, cool.
project, So that
Yeah.
was, I think it was 500 billion, I don't know, or 500 million. I don't know. It was a huge project, 500 million. I'm
Wow.
really exaggerating. So it was a big project. But I also did a lot of CMHC financing and construction financing. And I've always been in construction financing since, even when I was working out projects, we were always doing construction financing. So it's been a big part of my career. Um, did another stint at Infrastructure Ontario
Yeah.
during the financial crisis. That was very interesting. Um, so I got to experience federal government. I got to experience private sector. Then I got to experience provincial government. Uh, Very, very fun place to go because you could actually create money, which I've never
Wow.
experienced before.
Okay.
They,
Okay.
they could just issue a bond and anything would get paid for. So I guess that's interesting. So
Oh, that's amazing.
yeah, and from there I started my own business. We started with brokerage loans administration, and then we did mainly we mainly serviced institutions.
Yeah.
And then as things evolved, I had friends calling me saying, "Hey, can I get some investments with you? Can I?" And it was very organic. So then we
Oh, that's
started
amazing.
placing individuals in deals, and that evolved into, I think right now we have about 110 million under management of just private capital, and
That's
and
amazing.
we ended up starting a mortgage fund itself in I guess about 4 years ago, 5 years ago, called RealAlt.
Yeah, real.
And
Yes.
RealAlt is focused. It's very small. It's about 20 million, but it's focused right now. I mean, it does land and construction and development, but we're really, really focused on the missing middle stuff in Toronto.
Wow.
So that's where I see a bit of a future or a very interesting new product, I guess, that we
And
could use in this city.
is RealAlt undertaking the developments themselves, or are they just investing in others? Is that
I think RealAlt's focus is debt. So what we'd like to do, with our management at Dorr Capital is what we would like to do is find small, medium builders, could be big builders, but I don't know if they'd be attracted to this space. And people who want to develop out these 6-unit multiplexes, we would like to finance the debt. Now we could do it like institutionally, a blend of private and institutional, or just private.
yeah, yeah,
And there's smaller deals, like they're 2 to 5 million.
yeah,
We would obviously go up. We could do up to 100 million if we had a nice big apartment project.
yeah,
But I think nobody's really like to service this small mortgage space. I know it's always been a challenge,
right.
but with what the city's offering in terms of no DCs for 6 units as of right, I think it's the right mix of removing red tape and reducing costs that I think will make it a really interesting.
So that's primarily in Toronto you're doing those deals, right?
Yeah, it could be done elsewhere. It's up to the municipalities, right? So,
Yeah, for sure. Well,
yeah.
it's about who's offering the best deals out there, right?
Well, you're on the
Because
development side, right?
yeah,
If you're
yeah.
getting $85,000 a unit in DC waivers, I think you'd be
I think
happy to.
there's your choice.
Yeah,
Yeah, exactly,
yeah.
exactly. So that's amazing. And so what exactly prompted you to just go out on your own? Was it you said, okay, look, I want to do this. And what age did you do it in your career, if you don't mind me asking?
Yeah,
Because
those
you
are
look,
very interesting
you're a
questions.
young guy. You're like, I don't know, 35, 37.
You're a kind man, kind man. Okay, well, going on my own, I think when I left CMAC, really, I kind of went on my own because you start working for commission,
Yeah,
and as soon as you start successfully working on commission, you realize you can make money like a business, right? So.
yeah, for sure.
And I think, I guess a lot of it, I had good family support, number
Yeah,
one.
yeah,
And even when I was at CMAC, we do all these management tests, right? Like, okay, you're too entrepreneurial for our organization. And I'm like, what are you talking about? You're
yeah,
everybody, you're over here
yeah,
with
for
the way
sure.
I think about things. So, I guess I listened to some of the people that were coaching me at the time, and I just ventured out, and it was a successful. I had good people around me, and it was successful. And then as I was successful at brokerage, I thought, well, why not just start my own thing? It really hit a point like after Infrastructure Ontario. I realized I felt like I wasn't. I was with organizations, and I felt I was learning, but then I felt, I'm not learning. I got to give. I can now. It's my turn to give back. So I got to start something. We had a missing middle. The what had happened is, institutional financing had contracted after 2008, and it
Yeah,
left this whole huge opportunity for private capital, which has grown
yeah.
ever since. So I just saw it and I went for it,
Good for you. Good for you.
and that was back to age. I think I started this journey actually in my early 30s, like about 33, and then I started my own business I was about 42.
Good for you. Good for you. And look at your company now. That's amazing.
Thank
So
you.
how many people do you have working for you now?
I'm gonna say 12-ish. It kind of goes up and down, but it
Yeah.
kind of hovers around 12 to 15, I guess. Yeah. You
But you're
know.
doing some amazing big deals, and you're that's a testament to your success. So that's great to hear. And I did want to ask you, like, first of all, we're in a really tough market right now,
Yeah.
and what do you what do you have to say about it? Because you talk about a financial crisis. I think, back then I heard about it. We knew about it. You were watching it in the news. You heard about it in the industry that nobody wants to lend. But it was kind of like a blip almost. It was like a couple of years in and out, and then people were back hot to trot. And but now this is, and I in my book, we compare this to like a '90s recovery. Like you had this, the condo market in general, obviously we know it's completely dead right now.
Yeah.
It's probably going to stay that way. All signs say that's going to stay that way for a little while.
Hmm.
Um, so how do you feel about the current lending environment?
It's difficult. Very difficult. I mean, if you're going to take a long perspective, I honestly believe this is the right time to invest and buy if you have the cash, right?
Yeah, yeah,
I think, I don't know. I think we're probably at bottom or close to bottom. We're kind of skimming along bottom. I don't know, where you would call it in the history of real estate cycles.
yes,
But like this is similar to the 90s, but not like the 90s. I think the 90s was a different kind of shock. It was,
yeah.
I think, a little bit more Canadian than
Well,
this.
it is very comparable. I mean, like in terms of like, condo
Yeah.
prices were down and a lot of inventory units. So there's like similarities, but you're right. It's not the same. Nothing's ever the same. So
And nothing's ever the same. I think this has got a lot more global issues than I think, we all were like, hey, everything's going to move again this year. But I think we experienced the U.S. and their politics, and I guess their version of trying to deal with debt, which is
Yes,
tariffs, right? Which is a very unusual move.
tariffs.
Like that's a 100 years
Yeah,
ago
yeah,
move. So I think, that's I think we're preoccupied with that. I think that's got it. I think we're overdoing it. I think we're overestimating the impact of that. I think in terms of everybody's freezing, right? I think we need to move on with our lives and deal with it.
yeah,
Um,
and the impact of that in terms of Canadian jobs and the Canadian economy, obviously, would you agree it's significant? And because we've had some job statistics come out,
yeah.
and they're not good. And I that's what worries me the most is that this issue with the tariffs and the U.S. and I think Mark Carney's got to make some kind of a deal quickly because he's going out to Europe and trying to find other trade partners, which is good. But at the end of the day, the elephant in the room is the United States, and we got to do something about that. Now, those are my personal opinions, and let's see. I'm gonna.
I agree. The problem I see, as a real estate negotiator, right, and
Yeah,
him being a real estate president, I guess, his negotiation style is hard to work with, right? So it's
that's true.
so I go, just me in my career, when I get guys like that, I don't usually deal with them. That's
Yeah,
just me.
okay.
I move on and I go do my own thing. So maybe
But
my own take.
once in a while, you're stuck with dealing with guys
You,
like
you
that.
got to deal with what you got, right? But I think you just adapt to it, right? You got to. I don't think fighting it or arguing with him. I think the mistake some of the Trudeau made was he didn't show him any respect. I think that's wrong
Mhm.
anyway, right? Like I think you should always show respect to other people in power. I
Yeah.
mean, you may not agree with them, but
You still have to show respect. That's true.
so
Anyways, we're getting
we're
into
getting digressing,
Trump
but
territory.
but
So
I think my theme here is like we just have to accept what's given to us and make our own decisions. I think there's a lot Canada can do. I think uh, I still think our issues haven't changed. I think we have too much red tape.
yeah, that's for sure. I
Our
agree.
taxes are, especially for high income earners and people who invest in our economy are too high,
Agree
right?
with you there too.
And we're one of the most protectionist countries in the world. So, Donald Trump has a few points there. We are.
Mhm.
Like we don't allow foreign investment in this country very easily. I think we're like 74th ranked in the world. It's not very good.
Yeah,
So all the things we're accusing him of, we already do. So so I
there
don't
you go.
know. We could fix ourselves, I guess. That's what we should do.
Yeah, and back to the cycle here. So there you go. You have it. There's a lot of things happening in the world. There's a big trade issues, and Canada's pivoting, significantly pivoting, and hopefully things turn out for the best. But do you see a recovery coming anytime soon, or is it maybe still a couple of years away, or give it another year? Do you see this things improving in 2026? Give us your predictions if you don't mind.
Okay, so I think this was a very tough year. A lot of transactions. There's not really a lot of transactions. Everybody's pivoting to rental. I think that makes sense. It's a great opportunity to increase our rental stock. I mean, I'm pushing small multis. I think that's sort of a recession proof ish business, right? And it's a
Yeah,
good opportunity to create a little business like that. Whereas I think if the economy is really good, no one would pay attention to that piece of the piece of the world, which I
yeah,
think is a necessary step for, or like let's say Toronto local. So I think people need to look at good opportunities like that. The other is low rise. I mean, as long as people adjust pricing and product, I think low rise will take off.
I agree
Uh,
with that there too. Yeah,
High rise just got to work through the. We got some problems fundamentally there. I think our interest rates are too high to support the cost structure.
yeah,
I think
too
the
high.
cost of high rise is really high. Like
Yeah,
it's
yeah,
just it's out of whack. Um, so it's going to take a while. And we're building micro units, which nobody really,
Can use.
yeah, maybe like a few are okay, but we probably built way too many. So,
Yeah. Yeah.
so I think it'll come back, it'll adjust. But yeah, the high rise, I think, has probably got some long run problems
Issues to deal with. Yeah.
or medium run. And then I think you're going to see in 2026, I think you're going to see low rise come back. I think people need to still want to live. We haven't done anything for 3 years.
Yeah. Yeah. Well, I think the low, you're right. I think your prediction is pretty bang on. Definitely low rise will come back, I think. I think in 2026, maybe we're going to see some improvement there. And then I think the condo market, you're right, also has to settle itself out. Are you confident in Build Canada Homes? Do you know much about the program, or are you
Okay, well,
still figuring it out?
at the risk of sounding cynical, and I have worked for the government, I have worked for CMHC. So let me my view there um, is it's possible that it could be good, right? Like it's possible because if you use federal lands and you essentially give away the land on a land lease for 45, 50 years, you could throw in some huge savings to people, right? So
Right.
there's a real thing you could do. But then you've got all the municipal governments that you got to work with across Canada, which seem to all have their own issues and little and building inspections and building standards. So modular housing is a great idea, but it's not like cars. Like cars are built to one standard across the country, whereas housing isn't.
Right.
It's just not like you've developed this. It's
You can get a package or something from one modular company, and then some. Well, there's all sorts of different systems too. There's wood modular. There's precast modular. There's so many different products out there.
right. And then you're gonna go to different municipalities, and they're all gonna treat it differently.
Yeah, that's true. Yeah, yeah. And
So
the approvals haven't changed significantly enough either. I want to develop this amazing AI software program, sell it to all the planning departments, where it's going to instantly tell you what you have to do with your property, give you a list of items to do, like within a day, not within like
that's the
you
way
know
to go. I think
years.
that.
Like, well, it's $1 billion idea. I'm telling you.
I think that's an interesting, also another variable that's you got to throw in our mix of our current economy, which it's kind of like the 90s. Like the 90s was the actual internet itself.
Yeah,
This is, I think, a similar game changer is AI. We don't really know. We're just at the beginning. We don't know where that's going to go. And I'm hopeful
yeah,
that it'll create some positive changes. Uh, but yeah, Build Canada Homes is got a lot of challenges. The other one being, I don't even know why they created it. Like, I mean, we had CMHC. CMHC did this. This was the reason why CMHC was created in
yes.
1945. Like, I don't understand why you need to build a new company, but okay. They have a lot of
Mhm.
expertise there. Are you going to just take those people and put them in the new company? I don't know. I don't know what the thought process.
Right.
So, uh, I don't think that was the best way to do things. I would have changed things through tax incentives and policy.
Working.
I would have, got rid of red tape and
Yeah,
uh,
that sounds like a plan. Like, or provide some funding for affordable housing. You could give away federal lands, like you said, in a lease type scenario, and a lot of other things they could have done. They could have done something with development charges, et cetera, et cetera, et cetera. And there's so many things they could
so
probably
many
do.
easier ways than just creating a new company that says I'm going to do it for you.
Yeah, exactly.
Like, do you think they know more than you? Some new,
No, absolutely not. Yeah.
yeah.
But they're in. I guess. Well, we're trying to get someone from Build Canada Homes on the podcast just to hear more about the program and what they see is coming down the pipeline. It's listed. You can go to the website and you can learn more about the idea about the program. But at the end of the day, it's we'll see what happens, and hopefully, it's going to be a good thing. You never know. Let's be
There's
positive.
potential.
Let's be positive.
Yeah, yeah. I want to be positive too. Yeah.
So you've seen a lot of so this market too. What we've seen over the last let's say call it a year or so is a lot of distress projects too,
Yes.
and you are have an advisory group dealing with distressed projects and receiverships and
Yes.
a lot of that going on around. And I'd like to hear more about how you help people in the industry when they're experiencing some significant delays or financial strain, and how Dorr Capital is stepping in to support and helping them restructure. So could you give
Yeah,
us a
sure.
little
So
bit
I
on that
mean,
too?
actually, a lot of our mandates have come more from the bank and the institutional side.
Yeah.
We one specific example I can give you is we got involved in a project called Weber Yards in Kitchener Waterloo. We actually contributed capital. We put together a team to build out and partnered with some existing lenders on the site to build out a geez, 4-tower project. We just built the first tower, finished it, hit our occupancy dates somehow. Like the partner there,
Right.
really outperformed.
Was
So
that Elevate? Was that
that
what
was
you?
Elevate, yeah, yeah.
Yeah.
So
I know. Through clear disclosure, I know the owner there.
oh, the
The
previous
previous
owner,
owner.
yeah,
He's a nice guy.
I like him too. I tried
Very
to
nice
help, but I
guy.
go, there was just nothing to help, right? Like it was just,
Yeah, yeah. And sorry, go ahead. Like
oh, well, yeah.
let's get to the nuts and bolts. So
But at the end of the day, there was a lot of money at stake for the lenders. So we came in, and it's different than a normal development. You're just literally working for a fee. Like it's not even
yeah,
a big fee, and you just say, okay, we're just going to fix it, and you're going to repay all the debt. So you
I
can't
see.
think of it like a normal development where you got your 15% profit. You really you're thinking of it just to get it done, right?
So
And
you're actually doing it for fees, then, right? So let
yeah,
me ask you. So that didn't go into did it go into receivership
oh
or no?
yeah, oh yeah,
Oh, it did. Oh,
full
okay.
thing, yeah. So we got it out of receivership, essentially bought it and took it over and completed it. You know, my other advisory work would just simply be, I mean, I just talk to guys. I don't actually charge anybody for good advice,
Yeah,
but uh, it it's a very nuanced business doing default. It can
yeah.
be anything from a new workout to restructuring a finance to injecting new capital to re-amortizing to there's just so many little so you got to figure out all the different components and what everybody needs, and then you got to find that solution within it. And it's so nuanced. It's not a simple thing. The process is simple,
Yes,
but
yes.
the devil's definitely in the details. It's
And it's not good for those buildings to sit there for so long, not having any attention to them because you get damages in the building. Sometimes you get theft, and yeah, there's all sorts of things that can happen that makes things worse on those projects. And yeah, I'm experiencing. We went back to help a project, and it's a good learning experience for our team because we've never been involved in any distressed projects. But you're basically, yeah, you're right, finishing it off at a fee just to get it done, getting everybody's money back, and that's pretty interesting. So there's success at the end of the day for that project, and I'm glad you're working things out. And it's you worked with Elm Developments.
yes, yeah, they've been very good. Yeah, yeah, I think this is crazy. They were working since we took over, let's say last December. They were working 18 hours, 7 days a week, uh, up
18
until maybe a
hours.
month ago.
Oh my God, that's
Or maybe
so.
not even a month ago, like 2 weeks ago. I mean, it's just
So they had like two crews or two shifts
I think
working the building.
we used overtime. And that's another thing that was really interesting because I've worked with budgets and and you go, oh, overtime is bad, but they cranked the overtime, and what they proved to me is time is money, and they just
Yeah.
moved it fast. We actually came in under budget.
Oh, that's
So
great.
uh,
That's really.
it was very interesting actually.
So who did you work with at Elm? I know one person at Elm, Jason Dalia. I don't know if he's still
Jason's
there.
the man.
Oh, he's the guy.
Jason's the man. Yeah. I mean, I
Okay.
work with Elliot and everybody. He's a big team, but Jason's definitely the man. Like when it comes to the building side. Yeah. So
Well, that's
he's
great.
very
That's
good.
great. Well, I'm glad you guys had some success there.
Yeah.
And so now this is, I guess that's kind of the things we're experiencing in this in investment climate and everything like that. And you have projects that are having big financial strains. You got a lot of receiverships out there. That's something that we're just seeing because of, I guess, on the as the interest rates came up in the last couple of years ago, uh,
Yeah.
everybody started getting hurt. That's
Huge shock.
typically, yes, it was nobody was ready, or most of these guys weren't ready. And I think that's a testament to how people are borrowing money, and even our clients, picking our clients, we have to make sure that they have more than just financing in place. Maybe financing in place isn't enough anymore. I mean, look what happens when projects, are delayed or there's a problem. They have to come up with that equity to put into the project.
Yeah. The only thing I think people should
And
take
they don't have
away,
it.
yeah, I think people get attracted to growth, and I mean, we're all the same.
Yes,
Greed and fear, right? So you get attracted to growth, and sometimes you maybe should restrain yourself a little. Like just because you can,
right.
maybe you shouldn't, right? And I think what happened when the money was really cheap is everybody said, "Hey, I can do this," right?
Yeah, yeah. And there's a
And
lot.
then
Go ahead, yeah.
and then it got expensive and it got slow, and that's the
Yeah,
worst of two combinations. So it's yeah,
it's a tough one. I think you're right about that, and I think there's a lot of people in the industry, inexperienced developers that came into the marketplace too.
yes,
We find that when we work with a good client, an experienced client, the projects go very smooth because they've been there. They've done five or six buildings already. And I could say the last project we did in Whitby, it was a Harbor Town. It was about a $30 million, five-story mid-rise
yeah.
condo. And for the most part, the project went well, but at the end of the day, like 40% of their buyers just left the deal, and that caused its own problems afterwards as well. But it's a tough market to navigate, and but you're feeling optimistic here, and I guess you're. Tell us a little bit about the missing middle. How did you come across? How did you discover that sort of niche market? And tell us a little bit about that, if you don't mind.
Well, okay, so again, somewhat organically, I think I started following it about 3 years ago. When the municipalities talked about, I mean, we're just literally talking about, hey, we should give as of right zoning, right? This is and I think as of right zoning is one of the big things that, in general, that Ontario should be looking at, because if you look at our, I mean, I know I'm telling you something you already know, like
Yeah.
everything in the, but for other listeners, the everything in Canada, or at least Ontario, is by exception.
Yes. Yes.
You have your zoning and everything is by exception. You have to change
Yeah.
everything. Like, doesn't matter. You got to go through all this red tape and change everything. And you talked about your delays and your project that we were just, how we started the podcast, how we met. I go, that's the stuff that shouldn't exist.
Yeah, that makes sense. Actually, forget about the AI software. You can just make everything as of right zoning and fix it all.
Right. Like if you go, you're not going to even bother applying for a 12 unit building if you say, well, I got 10 units here. I don't have to spend any money.
Yeah, exactly.
Like
It's
you're just going to design it and build it and go, right? Like it's
Yeah,
just,
exactly. It makes sense. Yeah, because I spent a fortune. Well, actually, I have a cool project in Owen Sound.
yeah.
Do you know Owen Sound at all, or?
I do. I have a place up in Collingwood, and I know that whole area really well. I love it up
Oh,
there.
do you?
So
Oh, nice. Okay.
yeah, yeah.
Well, I bought the old courthouse and jail there. It's an
Oh,
18.
okay, okay.
Yeah, I bought it, and me and my wife, because we got married at Casa Loma. She loved designing the wedding so much, she got into the business, and she prompted me. She goes, "Okay, go buy a venue." That was my task. So I took the old courthouse and jail, and we're converting it to an event venue, entertainment complex with like dining facilities, a private club, shared workspace. It's about 30,000 square feet. And I guess I'm pitching you a little bit too.
Okay, hey, okay, that's good. Yeah.
And yeah, so we're converting it, and we went through an OPA, we went through rezoning, we went through site plan approval. It's all done. And it was like they were good to work with. They were very nice. They rolled out the red carpet. They're very pro business in Owen Sound,
Yeah.
and that was great. But I still had to spend a lot of money to get it approved. And something like that, why do we have to go through that? Is a good point.
Yeah.
And and I'm looking for some money there too. So maybe you can help me out.
I'm
Do
happy to
you,
take a look.
you look at commercial deals like that? And
I've done
I didn't
everything.
invite you to the show because of this. Obviously, I could just give you a call and stuff like that.
I even financed a hockey arena once, but it's very anyway. I can't say yeah, that might be yeah. I can help you a little. Yeah, it's not my specialty, but I definitely know how to do it. So
We'll talk. We'll talk. If
we'll talk for
you
sure.
don't have to either. It's just
But I
we're
definitely know how
happy.
to do it. I
I'm
know.
happy just to have you on the show and and get to know you and hear all about your stuff. So, but anyways, go ahead. Back to the missing middle. I sort of segued there, but
Yeah, so what's really interesting about the missing middle, they've tried to do two things in Toronto, which I think is good, is that if you look at the yellow belt, which is all of our single family housing, which is sort of probably underutilized, right?
yeah, yeah,
And so you can basically, use low rise construction costs, which are much lower than high rise, to
yeah,
build, something 4 to 6 stories max, right? Which is not crazy. And you can take it on as normal building lot. Like we have one that we're doing on a 25 by 110 lot. They put
yeah.
5 units on it.
How many?
I
Five?
mean, what's that?
So say it again. That was
5 units, right? On,
and
on a lot
what
of
was the
25
dimension?
by 110.
Oh wow, narrow lot.
Tight, tight, tight. But like a little anyway, it's going to be. And what's great about five or more units is that gets CMHC insurance on the commercial side, right? So in theory, you could finance at a 1 to 1.1 debt cover. You could build. You could you buy the land for $1 million. You put in another, let's say, million of cost to build it, maybe not even, right?
Yeah.
And you've got a property that's worth, 2.5 to 3 million bucks. Plus it makes income.
That makes
So
making. Is it making? But it's not making a lot when you're uh, at the beginning,
but you're still
right?
making good builder prop. Like it's still a reasonable, you can make 15 to 20%, right? As a
Yeah.
builder, like as a developer, right? So,
Yeah.
I mean, obviously land value has a lot to do with that, but the
That's
fact that you're
awesome.
not getting the $85,000 DC charge, no
Yeah. Yeah.
HST on rental product, it's definitely a thing.
So what does someone buy them out as more like do they come free and clear or do they have a small mortgage when you finance it or how does
Most
that work?
guys, a little bit of both, but most guys are they're contributing. Yeah, you probably need the $1 million of capital or 800 or something significant to start, right? That's
Yeah.
sort of your nest egg to start. And then I think what's good is I've seen people build them to sell them, right? And then they get a
Yeah.
CMHC takeout and people, investors just buy them or they keep them, right? So I think there's a model there where you could be you could just be like a trade builder, right? You can just keep doing this.
Doing this, yes.
I,
Yes.
I think it's a pretty interesting business. So I'd love to see that roll out all over Ontario, all over Canada. I think it is going out. I think there's Alberta's doing it. Obviously, BC started with this. They were ahead of us on this, so they already
Yeah.
have this there.
Did you
So
go to the Missing Middle conference a couple of weeks ago or
I did, yeah.
did you also go to the other rental show that was the day before? I think it was a big apartment rental show.
I didn't go to the apartment show. Probably should have, but I focus more on the small stuff.
Well, that's
Although I
good.
am looking for doing a lot more apartments next year. So
Yeah, you know what? We thought like we've been doing like we do larger builds obviously. We've done a lot of conversion projects, we've done mid-rise, we do a lot of mid-rise work. Our you know we like projects like probably worth in the 30 million range. But
yeah,
I've been studying this missing middle a little bit and maybe it's something that we might be interested in doing. Maybe I can pick your
yep.
pick your
Love
brain
to have you
on.
talk to you about it. Yeah, maybe we'll do another podcast. Because I have my own YouTube as well, and that's what we do. I just go to the sites and talk about what we're doing. So like
Awesome. I'm
uh,
gonna check it. I'll definitely check it out.
it's an interesting space. Everybody's very collegial and wants to share information. It's almost like it's like a whole different way of thinking about development. Everybody's
Yeah,
very, okay, let's help each other. It's not the same
well,
as the big stuff.
like get out of here. Where we don't talk about things. Yeah, kumbaya,
I
we
know.
all kumbaya, right?
They're very different. It's almost religious.
Oh my goodness. I don't know if I can fit into that place.
You'll see when
I'm a
you get
very,
into it.
I'm a
But
very competitive guy. So what can I say? So, so that was it a good show at the end of the day?
yeah, it was very interesting. The way the guys that developed the show, I mean, I could get into how they did it. It's very Gen X or Gen Z. Sorry, Gen
Gen
Z,
Z.
not
Okay,
Gen
yeah.
X. The
We're Gen X, I guess,
yeah. So
right?
we don't think the way these guys do, and it's very. I'm very encouraged of the Gen Z and developers. They're very collegial. They're very they organically created this thing. They didn't have. They did this from a Reddit chat room, and then
Yeah,
they
yes.
raised investors that way, and then they built some stuff in Barrie, and then they raised more people, and they just kept people, and then it turned into like WhatsApp chat room, and then it turned into this conference, and they did this all in 6 months. It's a very
Yeah.
different.
I saw the WhatsApp chat room. I joined it and I left it. I couldn't, it was just, I was getting like 30 messages a day. But yeah, that's interesting.
Well, you sort of experienced it, but it's hard for us in the Gen X to go, okay, I don't understand this. But anyway, it's at least we're doing this. We're doing the podcast. I feel we're pretty advanced for our group.
I'm, I'm more of the guy from There Will Be Blood. You ever seen that movie? The oil guy. That's my hero. So,
Yeah.
anyways, maybe I shouldn't be saying that on. But anyways, that's okay. So tell me a little bit about your syndicated. So I noticed on your website you got one for financing. That's like kind of like the brokerage division, right?
Yeah.
And then another one you've got investing, and so that includes syndicated investing and your real fund trust.
Yeah. So
Tell me a little bit about both if you can.
yeah. So
In more
RealAlt,
detail.
they're two different models. So this is a really great question. I'm glad you asked. So they're very different models, but they do the same thing. So a fund model is like, we take the same assets, but we focus it on the residential space. We focus it on our existing portfolio, some land and some construction. And my new focus is just stay completely on the missing middle, right? And that's spread out over many deals. So we got like 15 deals in there. So your risk is on 15 deals.
So
When I do syndication, you're cherry picking.
can I
So
can
you,
I can I just go? Can I go back for a second? My internet just froze.
oh,
I missed
sorry.
that the whole thing. I really apologize about that. Can you kind
Okay.
of go
Where do we
back
want to start again?
30 seconds? So we were
Okay.
asking about the syndicated investing and the syndicated mortgages. So
Okay. So let's just start from the top. When you're looking at a syndicated investment, you're looking at one deal. You
yeah,
as the investor get to make the decision to go in that deal or not go in that deal.
right,
So you could and it has a rate, and you're literally buying a piece of a mortgage. Okay.
right.
Okay. So you know exactly what it is. And then what we do is we create a web portal and we give you all this information specific to that deal. So you'd probably be a great syndicated guy because you love real estate and you know all about it. And you'd be like, okay, let's just, I like this deal. I don't like this deal. Right.
Yes, yes,
But the risk is higher because
yeah,
it's one deal. Right.
right,
Whereas if you go into our fund, we have a basket of deals and we restrict ourselves to just certain types, like only the residential product, only the product that fits that particular risk profile. Whereas a syndicated deal, I could be doing industrial, I could be doing this. So there's a whole bunch of other stuff I do in the syndicated bucket.
right.
But the biggest difference is that you're investing in about 15 deals as opposed to one.
How do you? Okay, so how do you differentiate between those two deals in your company? Because you have one-off deals, and how do you decide what goes into your other fund?
Okay, so for RealAlt, we have a thesis, which you're
Real-
hearing about the missing middle. We're looking for that product. If it's anything residential, I will
Yeah.
do in RealAlt. Okay, well, if it's got even if it's
Anything
land
residential you
construction
do.
or whatever, as long as it's all residential. So that's
Yeah.
fair
Okay.
game. I also like to be more sort of first mortgagee risk. My LTVs on my RealAlt fund are around 54%. So it, I'm trying to engineer the risk. We have a lot of land exposure. I'm trying to reduce that, but that's just sort of like every single lender right now. But
Yeah.
whereas the syndicated, I got some interesting stuff. Like I have a mandate from an insurance company. They actually want to sell us an A piece of their existing node at a really favorable rate. That doesn't fit in real alt, maybe a little because it's residential. I could theoretically do it, but it's a really interesting opportunity.
Right.
So I'll throw stuff like that. If it's industrial, if it's retail, if it's doesn't fit the bucket of real alt, it definitely goes into my syndication. And
Right.
know, uh, and we also syndicate, like RealAlt doesn't buy a whole piece, right? RealAlt will buy a small piece of a deal. So I still need syndication, even for the stuff that I do with RealAlt.
That's so you limit your exposure in real alt, I guess, instead of going in the whole. Do you do all whole deals in real alt or just fractions
On the missing
here
middle
and
stuff,
there
I
and kind
can,
of
yes.
mitigate
On the
the
missing
risk?
middle stuff, I can because they're small enough and it makes sense for a $20 million fund. Otherwise, I just take small pieces.
Yeah.
Yeah. Yeah.
So
So,
you started real alt yourself? Is that the idea? You did that fund yourself?
yeah. So it's a mutual
You started
fund
it? Like
trust.
how do you go about how do you go about starting something like that? It must be a big investment and a big deal.
It
Is
is a
it?
really big deal. So, Um, first of all, you have a big legal expense to start a fund, but raising capital in a fund is really difficult, really difficult. So I have a whole team. I have marketing. It's just a very different business than the traditional brokerage, and it's a very different way of doing it, especially when you're doing it like a private fund like this one. So um, I could go on for hours, so I don't even want to get into it. I think it might be really boring for people. Maybe it's
No,
not. I don't know, but
no,
it's very
no, no.
challenging.
It's very exciting. It's pretty interesting, actually.
Yeah, I missed that. Sorry, what did you say?
Producer Mike here to tell you Nick seems to have some internet connectivity issues. So hopefully he bounces back. Otherwise, I'm going to rip right into the outro. But Brian, this has been amazing.
Okay, thank
And
you.
and the big number I was reading about you is $3 billion. How does $3 billion pertain to Dorr Capital?
Oh, well, $3 billion was start to finish. So that's how much we've done in total. We keep a running tally of everything we've ever placed or financed.
My brain can't even visualize $3 billion. That's incredible.
Well, it's from 2000. So that's 15 years of work. So it's
Okay,
a lot.
because that $3 billion is what Nick carries around in his wallet.
Yeah, easily. I wish. Well, you know what? I don't have $3 billion, but Brian, you're doing something amazing out there. It's just incredible everything you're doing. What do you see for Toronto these days in terms of the market and everything like that?
Uh, well again, I mean, I live here. I like it here. It is expensive. I am hopeful. Again, I love the missing middle idea. Uh, I, I do think, I like Brad Bradford. I think I might vote for him. But so I think there's some hope here. I think it's a great city. I think we're a world-class city, and there's just so much we can do here. We have so much talent. But I see the missing middle as a thing that's going to transform. That'll be the next skyline change. It's not really a skyline, but I think it's going to be a streetscape change.
Yeah,
That's where I see.
yeah. So I think we're going to be doing smaller projects for a while. Like, does that make sense?
Yes. And
Yeah,
you're gonna
because
see like neighborhoods like the Junction really come into their own. Um, I'm fascinated with that neighborhood right now. It's just like
well,
uh,
I did a project there, Roncesvalles Lofts. Do you know it? It's a green and gray building.
I do. I've been hanging around there. So yes, I've been looking at everything. I think I think that's a you're probably ahead of the time if you when you did
Well,
that.
it wasn't me. It was a friend of mine, a roofer, and he owned the land there, and it was pretty good. And it was he basically I was building across the street, and he approached me to do the project. It's one of our first projects out there, so we were very lucky
Yeah.
to do that.
Yeah.
So you're studying that area? Are you living in that area right
I'm
now?
looking at that area. I'm looking a little in Scarborough. They're very different, but I think that area is very cool. Everything along the Eglinton LRT is an interesting play as well. I think
Yes, yes.
if they ever get it going, yeah,
But the traffic in Toronto is awful. What is going on? Well, that's why we need Brad to save the day and get all this nonsense fixed. I think he's going to do a great job.
yeah.
And so what do you see innovative in the industry these days? What do you think is coming down the pipeline? Is AI going to play a big role in real estate and construction projects? Where do you see the innovation happening in our marketplace? And with capital or financing too. Um, I don't know
Uh,
if is blockchain going to play a role here in the future, or is it just going to be more of the same?
well, okay. I don't know blockchain. I know it's a thing, but as a guy who's been in finance my entire life, I still don't understand it. Anyway, and
Well,
I literally have a master's degree in this stuff, and I go, yeah, I don't get it. But
that's good. I mean, a lot of people don't get it, but they sometimes invest in it. So,
they do invest in it.
yeah,
The only thing I understand it to be, it's a good way to avoid taxes and maybe do money laundering. I can't figure it out. But it will be, it's going to be something like I think if it's government backed and it's definitely here to stay. I think, but I don't know how it's going to play a role in fundraising.
right.
Um, I think the biggest thing we need to see is interest rates come down, and that'll return some liquidity to the market in terms of investment. I also think we need to create again. We need to get rid of red tape. That's an innovation on the government side. We need to change taxes. I think AI is fascinating because I bet you can use that to do better quotes,
Yeah.
like you were saying, takeoffs. So I think you're just going to see more and more, which is just going to improve speed in general.
Yeah,
And
we're using it for general productivity. If we like, for example, right now it's generally productivity because I can go, for example, I'm meeting a client. I have 5 minutes. I didn't read the geotechnical report, for example.
bingo.
I say, summarize this for me. Tell me if there's any issues. I throw it into AI, and then they'll say something like, I don't bring a recent example. One project had a groundwater issue. So I said, I was able to go to the table on that and tell our client, what's going on because I was able to summarize that report. So it was great for productivity purposes because I'm a busy guy. I can't read
Yeah, I
every
agree.
report that comes through my door. But you do want to check off those boxes before you go into a meeting, like you were given this information and it's your job as a construction manager to go through all the information very thoroughly so that you don't promise something you shouldn't. And that's what we do at Fusion Corp. We want to make sure that whatever we say, whatever we do, that we can deliver. And it's a tough business out there, that's for sure.
I agree, but I think that's exactly a great example. We read those reports too, and I think often I look for the one paragraph that just gives me a conclusion when there's some detail. If you're really going quick, like if I had to go to a meeting, I go, I think this is okay, but then AI can just do a thorough job really quickly, and then you don't miss things, right? So I
Yeah.
think that
Yeah.
saves a ton of time.
Yes, and we're using it, and you know what? Here's the thing: you got to be careful because people who are using AI, it's kind of a stigma too, because you're not being your authentic self, and you're not doing all the work yourself. So there's that sort of balance where, like, what's your work, right? Like, for an example, another thing that I use it for is like these lengthy RFPs. Like, before, you have to get somebody to say, okay, write something about this is what they're looking for, and then someone's got to spend hours doing the write up.
Yes.
Now with AI, I can do, for RFPs that go to like various municipalities, I can do a quick write up because it's really blah, 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 blah.
Yes.
That's not really the meat and potatoes but you want to give a good presentation. So it's a great way to do that. And I love AI because AI is great for developing ideas.
Yes.
Not sure if you ever did that before, but I'm very entrepreneurial, and I'm always thinking, like, I always have, like, every weekend I have a new idea. So I say, okay, is this a good fit for me? I always ask that question because it's got to fit in my
Yeah.
wheelhouse. I don't want to do something that's, like, go into the food business or restaurant business. I'm not going to do that.
Yeah. Yeah. Yeah.
It's got to be real estate related or something along those lines. And I find AI is really good because it helps develop good ideas. So you have the initial concept, and then, they'll spit out something. They always say it's an amazing idea.
It's very reassuring. It's good. It's good if you're feeling depressed.
Yeah, if you want to feel good, you can be an AI junkie. So, but I find it good in that respect because they give you some different ideas that, maybe you were thinking about X, and then now they add in the Y component, and you've got like this really refined idea that makes a lot more sense. So
I think it's very good at teasing out what's already in your brain and
yeah,
documenting it for you. So I think when you're doing it for creative stuff, I think, yeah, it is pretty amazing when you think about it.
because that's how human beings interact, right? Like, we brainstorm, and
Yeah.
it excites, or the conversation excites the possibilities out there. And I think with AI, you have some feedback. You always got some sort of feedback system where that's how, maybe that's how the Greeks learned in ancient times. So I'm Greek, by the way. So
Yeah, it may be. You guys created civilization. This
yeah,
at least Western civilization.
what a mess! What a mess! But well, listen, Brian, this has been a great, amazing episode, and you were fantastic. You bring a lot of positive energy, and you're doing some amazing things. I'd love to have lunch with you one of these days.
Absolutely. Loved it. I love the idea.
Together.
Yes.
Love to talk about some of these concepts a little bit more. And like I said, great guest, amazing time. Thank you very much for.
All right. Well, thank you very much.
And thank you for listening to Building Toronto's Skyline, a podcast exploring the current state of Toronto's construction and development industries. Proudly brought to you by Fusion Corp Developments, Inc. Please share, like, and subscribe. See you again in 2 weeks.